So today we're going to talk about housing, specifically where is it going, and here's the secret. Just follow rents. So some of you may know that single family and multifamily could not be more different. In other words, most renters typically want to buy a home, and if they can't buy a home, they default to rental. So you need to understand that, because this entire video is going to talk about the nuances between each and how one affects the other. So in this slide, you're going to see a simple supply and demand graph. On the left side, you see price, and at the bottom, you see quantity. On the right side of the slide, you're going to see I put up something really simple that everybody can relate to, and that is the price of gasoline versus the quantity of gasoline. And what you guys may or may not know, that as the quantity of gasoline based on tariffs or whatever it might be goes up or goes down, like the price of oil, it definitely affects the price of gasoline. So obviously, less quantity of gasoline, higher price per gallon. Same thing with real estate. As the quantity of real estate goes down or supply, the price goes up. We saw this before and during the pandemic, and we're seeing it now. As the price of interest rates go up, the amount of buyers go down. That's precisely what the Fed wants to tamper the price of housing, which is inflationary. So you might ask, where is all this heading and how do rents play into this? I'm about to show you now. So this chart represents the existing single-family home sales from the St. Louis Fed. But more importantly, what I want you to look at is what the 11 rate increases has done to sales of single-family housing. Not necessarily pricing, but sales. It's clear from seeing this chart in just 1 year that real estate transactions have dropped off significantly. For those of you landlords, I want you to put your landlord hat on and realize what happens when people stop buying houses. They actually default into rental housing. Now, this chart represents 10 years of sales history, and you can see going way back to 2023, 2024. So this information is straight from the National Association of Realtors, and you can see the first step that is circled here was the pandemic. That, of course, stopped sales of single-family housing in its tracks. Now I want you to move over to current day, and you can see that what stopped sales in its tracks now are the higher interest rates the Fed started implementing back in early 2022. So what I really want you to focus on when you take a look at these slides, what are the buyer habits at the high point and at the low point? So buyer habits at the low points actually default into rentals, and at the high points actually pull people out of rentals. And that is the lesson I want you to focus on. So what are the components to be able to offset rising prices, either for single family or for rentals? The key, of course, is more supply. But right now, the cost to build and the cost to borrow to be able to build is sky high. And therefore, a lot of the builders are putting pause on any projects that they have, which is now creating a lag for less supply, not only currently, but in 2024 and 2025, you're going to start to see this really show up. So this is not good, folks, because with the amount of population growth and the amount of people defaulting into single family and rentals, we actually need the supply to be able to keep up with the demand. So one of the things that I always look at is the percentage of renters versus the percentage of homeowners. And right now, we're at about 65% single-family homeowners and 35% renters. But mark my words, folks, this is changing, and it's changing fast. Back when you guys probably don't remember, President Bush started pushing home ownership, and therefore the home ownership rate got all the way up to 68 and 69%. But since then, it's been coming down ever since. And every 1% equals about 1 million renters moving from the single family side of the equation over to the rental side of the equation. And what's most important for you to understand is that when that happens, it creates more demand and less supply on each side. So as you guys are digging through the different kinds of headlines on where rents are going, what I really want you to pay attention is the top one. U.S. rents hit record highs for the 17th month in a row. Now that was just about 1 year ago. And the reason I picked this one, because since that time, mortgage rates have gone up, home prices have gone up, and rents have gone up. And this is precisely because we have not added new supply. The other two articles, ironically, are from Zillow and Realtor.com because, of course, they're trying to say to you that rents are actually falling. If you look at the fine print, for example, in the Zillow headline, you'll see that asking rents increased only 0.6% from May to June. What that really means, folks, is that that's only 0.5% per month, but it still represents somewhere between a 5 and 6% rent growth, which is extremely healthy in this market. So because of the lack of new supply, I don't see rents going down anytime soon, even in spite of what you're seeing here. Moving forward, guys, if you look at the rent trends to see where housing prices are headed, you're looking at the right measurement, because we right now are heading to a nation of renters, and there's really nothing that could stop us right now because the prices are high to build, the cost to build is very high, and the supply is going to continue to be dwindled, and there'll be more and more demand on the rental side as more and more people are not able to afford a single-family house, which does not look like the prices are going to go down anytime soon.